Accounting and financial reporting in Canada. A notice to reader or compilation engagement is appropriate in Canada only when the client and other users do not require financial information that conforms to generally accepted accounting principles in every respect. When audit or review assurance is not required, and when the client understands that the statement may not be appropriate for general purpose use. In other words, a notice to reader or compilation engagement is appropriate only when the client and other users do not require financial information that conforms to generally accepted accounting principles in every respect. A notice to reader/compilation engagement is only appropriate when the client and other users do not require financial information that conforms to generally accepted accounting principles in every respect. To put it another way, a compilation engagement is only appropriate when the client does not require financial information. To put it another way, before a notice of reader/compilation engagement can be deemed acceptable, each of these conditions must first be met. A notice to reader/compilation engagement is the only type of engagement that should be used when a client and other users do not require financial information that adheres to generally accepted accounting principles in every way. The processes are not intended to in any way, shape, or form provide licensed public accountants with any kind of assurance regarding the dependability of the information that has been compiled. This notice states that no review was performed on the information, as was stated earlier, and that the reader should be aware that the information they are about to read may not be appropriate for the reader to use in any capacity. The notice also states that the reader should be aware that the information they are about to read may not be appropriate for the reader to use at any time. A compilation might be needed in situations where the financial statements are being prepared solely for the use of an organization's management, or when they are being prepared in order to comply with regulations concerning income tax. A review engagement is meant to compile and analyze the financial statements of a company in order to determine whether or not those financial statements are credible, which means that they merit having faith placed in them. This determination is made in order to determine whether or not the company should continue to have that review engagement. After conducting an analysis of the financial statements, the accountants will append their standard report to the statements if they come to the conclusion that the statements do not include any information that could be interpreted in such a way as to cause the reader to form an incorrect impression of the company's financial situation. This determination will be made after the accountants have determined that the statements do not include any information that could cause the reader to form an incorrect impression of the company's financial situation. In order to carry out an audit, a certified public accountant, CPA, needs to be able to maintain an objective stance toward the customers of the organization that is being audited and have sufficient knowledge of the industry in which the company competes. An audit engagement is carried out for the purpose of providing independent certified public accountants with the opportunity to express their opinion regarding the accuracy of the financial statements of the organization that is being audited. This is because audited financial statements provide the most reliable and accurate information. The reason for this is that audited financial statements are in accordance with generally accepted accounting principles, GAAP. In Canada, limited companies, which are also known as corporations, are generally required by both federal and provincial legislation to produce annual financial statements that are subject to audit by qualified independent auditors. These statements are audited to ensure that they comply with generally accepted accounting principles. The management of the company is responsible for the preparation of the company's financial statements, which will also be subject to auditing. The audit needs to be planned in such a way that the auditors can obtain reasonable assurance that the financial statements do not contain any material misstatements. This requires the audit to be planned in such a way that the auditors can obtain reasonable assurance. In addition to inspecting documents, observing assets, making inquiries both within and outside the company, and following other generally accepted auditing procedures, the auditors will study and evaluate the company's system of internal control in order to gather the evidence necessary to determine whether or not the financial statements present an accurate picture of the company's financial position and its activity during the period that is being audited. This is to determine whether or not the financial statements present an accurate picture of the company's financial position and its activity during the period that is being. The auditors will be able to use this information to determine whether or not the financial statements provide an accurate picture of the activities that took place within the company during the time period that is being audited. We are going to determine, with the assistance of these pieces of evidence, whether or not the financial statements provide an accurate picture of the situation.